Hey there, welcome to the closing bell on the 18th of October for me on the Friday afternoon. And wow, aren't the markets looking good? Everything seems to be going up. So this week, I thought I'd have a chat about, well, what can throw a spanner in the works at the moment. We know gold's flying higher, looking fabulous. There's no need to worry about that for the moment. We'll need to see actual selling pressure before I'll need to worry about those positions at all. But the thing that's on my mind is after watching the Donald in an interview during the week, and he was pretty gung ho about his desire to really ratchet up the tariffs if he gets in. Now, the odds of him getting in are going up and up by the day. So while the market's not knowing what's going on, not many positions are going to be put on while people think it's 50-50. But if the odds of his success really go through the roof, we could see the market starting to position itself for what could come afterwards. But also, when the election happens, there could be some big moves in positioning. So you've got to be aware of that. Now, if you're putting on positions now, if you're taking on risk and thinking everything's fine, just be aware that we're heading towards the US election and there could be some large volatility around that. So what I wanted to think about today was the Donald talking about ratcheting up tariffs on China massively across the board, 60%, wanting to raise tariffs so high on cars imports, for example, that they actually stop importing cars completely from Mexico, for example. He's got his eyes on Europe. He's not happy with the deals they've made there. So he wants to use that stick of tariffs to drive behavior from other countries, to drive behavior in the market, to bring manufacturing back to the United States. He seems very convinced. We had a roundtable discussion with all of us yesterday discussing these issues, and someone made a good point that, look, politicians say a lot of things before an election, and after the election, real politic sneaks in, things are changed, they're watered down, and deals are made, and it's not as huge as you think beforehand. That's possible, but I'm wondering whether after he got a taste of these tariffs last time, he had a little bit of a dabble when he was president before. So he seems pretty gung-ho, and I wouldn't put it past him to really come at it when he does become president again. So I'm wary of that. And I've seen details that, the US or Goldman Sachs, sorry, a report saying China growth could be halved, in the next year or two. So from struggling to get to 5%, property market that's really on edge, if their growth then halved to 2.5%, of course, there'd be stimulus to backtrack on some of that. But that could be pretty difficult and would also be difficult for Australia, wouldn't it? So, those sort of issues that are now coming into the fore as his prospects of actually getting across the line really increase. Perhaps we're going to see a bit of volatility on the back of that, and we need to be aware of what could be coming. So I'm going to look at the Hang Seng again to start off with. I think it's a nice little proxy for us to get a sense of what's going on after the China stimulus. I want to zero in on the exact levels for you to look out for as things go on, and to contemplate, what could be the repercussions going forward. So let's have a look at the charts. So this is Hang Seng on a monthly chart, and we looked at this last week. If you're new to this, I'll explain it all, don't worry. We're looking at a long-term chart, and I'm always looking at these major waves and then the pullback into the buy zone of the area. So that's like 75 to 87% retracement, and that is sort of going on and on over it. And again, in that Hang Seng, it's been quite amazing watching it sort of, seeing that how it has taken shape over and again. And so I'm looking at the most recent wave, that's from 2009 up to about 2017. And since then, we've seen, the property market troubles kicking in. It's been trouble, hasn't it? So looking at that Hang Seng, it is in an area where I'd expect to see major support. And this is why I've been thinking, look, perhaps we are going to see um, things turn up from here eventually, because there's the major sort of area where I'd expect to see good support if this long-term uptrend is going to continue. And we have seen prices bouncing a few times off there over the last year. So there's been, this is where that major support has come in. So, there is a case to be made that things could turn up from here. We've got a long-term uptrend that's just begun. So all well and good. And just take note also of the midpoint of that previous rally, which is very important. That's the 22,000 level in the Hang Seng. And you can see that there is some resistance coming in there on multiple occasions. So just recently we saw the stimulus measures, which, the market is still wondering whether that's going to be enough. M1 and M2, so money growth, still not looking good. There's a lot of overhang of inventory, a lot of apartments, buildings, etc., that are still to be finished. So they're still coming online and in the middle of getting finished. That inventory coming online, who's going to buy that? There could still be trouble ahead. So we saw, this spike over the last month, and this is a monthly chart of the Hang Seng. So this is showing you the spike that we've seen just on the back of the stimulus announced, but then the selling is coming back in. So over this last few weeks, I showed you last week saying, look, the selling is still about, and we are still seeing more weakness from that major level. So it's a really interesting setup for us to watch going forward, to create some lines in the sand to get a sense of what's going on. And I was saying to you last week, below the low of this whole structure, so the low of the whole sell-off over the last however many years, what's that, about 6 years or so since the high in the Hang Seng, if there's a continuation of this downtrend, it's not looking great, is it? So if we're sort of looking at this point of view, and it's tried to rally and then fails, so it's looking like this, and then bang, we've got the next leg down. That's not going to look very good, is it? So really, you don't want it going down below 14,000 to 15,000, as I was saying last week in the Hang Seng. So I'm really watching that. But we are seeing pretty stiff selling pressure here, aren't we? So I think there'll be a big battle. If I'm just looking at the way this is moving at the moment, the first signs of a potential uptrend, because it has actually broken out above that high. So there's a chance of something like this, isn't there? This is sort of what I could expect to happen, usually, just from a purely technical standpoint. So what I'm saying there is that this sell-off could get all the way down to around 16, 17,000. So looking really terrible if it got down there. Could be a big battle on our hands down there. But if the buying turns up again and we get a buy signal, look, it really could be off to the races. But if it can't hold and collapses down through that 15,000, 14,000 below there, is very dangerous because it is a continuation of what really is the current downtrend. So watching this going forward, I think there will be more downside in the short term, and it could get pretty scary, I guess. And what happens with this election? This is all going to play into this election over the next month, isn't it? How do stocks respond? How aggressive is Trump on his calls on major tariffs, etc., etc.? That could be the catalyst that causes, a serious break to the downside. You've got to be aware of that if we're looking very long term on that Hang Seng. uh, it's going to look pretty terrible, isn't it? Especially going down through there, which is a major low from 2009. But, you could see continuation of this downtrend, a break below that level. Well, it does give a target down to there. There's not much support below there. So that would be a pretty terrible outcome for China and probably for Australia. Growth in resources, their exports really collapse, etc., etc. I reckon my, favourite is probably that we'll, see some weakness, maybe see some dramatic moves, but ultimately, I think we are going to create some sort of major low around here, um, and things will improve. Especially, I think they will, increase levels of support for the property market. Look, there is real troubles. They probably need to do more, and they've already started to act. So there could be more coming. So that sort of would be my view. Don't freak out if it does sell off more. Keep a close eye on it. Keep a close eye on the Donald. What happens, around the election? Be aware that he could cause some pretty serious volatility if he really does follow through with these tariff threats. So it's just something on the horizon to keep in the back of your mind as we move forward. The other thing in the news is, of course, uranium, with this AI revolution, the need for energy to run those. I think was it Google coming out doing deals to get some SMRs, these small modular reactors, the uranium reactors to run AI centers going forward. So really interesting development. I think these SMRs are a new technology, and will this be a way that they really come into the market aggressively? I think the long-term story on uranium for me still bullish. I've been talking about it with you for a while, and recently, I think even it was part of something I was showing you. You might have seen some presentations on this URNM being the uranium ETF. And, just interesting to note how it's been moving. Again, I'm looking at these waves, the corrections into the buy zone. There's your next wave. And I was talking with you about this one, saying, the buy zone of this ETF was around this $6 to $7. And look at that. Look at the way it's just bounced perfectly off that. And look, it's been such a quick rally. I'm even trying to get some people into this. And well, I've already bought it. Members of my service actually bought this back at $6, and we took profits up around $8, and have just been holding on with the remainder of the position. But I'm trying to get more people in, and it's making it difficult because it has just rebounded so quickly. But just note that end of this month, we're going to have confirmation of a monthly buy pivot there, and the long-term uptrend is in place. So that just really firms things up, really waiting for signs of momentum turning up. And then I have calculations for entry points, which I can't tell you, to get on to that. But just if you haven't got any exposure, consider the long term, the really long term on this, that the uptrend is in place. For example, we're seeing, and are you thinking of it in terms of this over the next few years? That's what I'm contemplating. So I do still believe in that story, but all things take a lot of time to play out. These nuclear power plants really take a long time, as far as they've ordered inventory for very long term. They take time to restock, and everything just takes a long time to really play out. There's not much trading goes on in the spot market in uranium. It's more the long-term contracts is how it really the price really gets set. So we're still, I think, in the very early stages, and that's just a pretty interesting development as we come into the end of this month in uranium. And I think, a lot of upside long term. And just finishing up on oil, there's been a lot of geopolitical risk around, of course, and oil has been flying all over the place, waiting for, is Iran's oil fields going to get bombed? Looks like that's not going to happen. Um, but the general sort of technical situation in oil at the moment is pretty negative. So I just wanted to outline the levels I have shown people before, but just to be aware that short term could get nasty, uh, but that will lead to, I think, great buying for down the track. I still really believe that oil is just so necessary, and people think it's all over. There's not a lot of exploration going into it, but the world needs it as the limitations of renewables, et cetera, get shown up. Um, so just looking at the oil price, and we've got that. I'll just look at the major rally over the last few years. Going into 2022, massive run up to around 140. And, the heat came out of that. And you can see the midpoint, that point of control, so important. And prices have really been holding above there, but struggling. And the point being that if this, lower sort of support level that it's been trying to hold around 70 bucks in Brent crude, if it does really give way, it can lead to a bit of a clear out of positions built up in this period over the last year or two. So it just could be a short, sharp decline. Now, I would be getting pretty interested down there with a long-term view. So that could be a pretty exciting development if it does occur. And I'm just, noting what's actually happening in the shorter term is that, that long-term downtrend is actually still live. And the moves that we're seeing here, I guess just, it's been such a strong sell-off and we've had this reaction. It's hard to make a lot out of that unless that low really does get breached, and then we've got the next wave down. But really what's been going on is a range trading period. So, looking at that range, I'm just really pointing out, you can see the buying coming in the buy zone, the selling in the sell zone. So it's sort of stuck in that range. We've got this wave here, down into the buy zone, back to the point of control, sell zone, point of control. So here it is sort of down in that buy zone, but it has actually broken that low. So it is showing that it's quite weak. And if you just look at, each bar, we got this monthly sell pivot there, then got the first key bar down, second key bar down. So it's still looking weak despite that recent strength, and it got rejected from the moving averages there, and here we are selling off again. So just to my eye, it's looking like it could attack that $70 level again. And if it does, it just could have a bit of a clear out of positions below there. But yeah, as I said, you would then be starting to get pretty bullish to pick up some cheapies out there in that oil and gas space. All right, I think that's enough for today. It's all about the election coming now. So yeah, just be aware of the different policies, what can happen, and that volatility could really erupt going into it and also coming out of it. All right, cheers. Come back with more next week.